Good morning, Jean-Marc. Thank you so much for taking the time to be with us today. We've been meaning to organize this for quite a while. We've been fortunate to discuss a few times how you look at the world and thought that it could make sense to put that on the table and to maybe share this with some of the members in the community that probably have a lot to learn from how you look and see the world. Thank you for taking the time to do this with us today. Maybe starting first, Jean-Marc, with getting to know Jean-Marc, because we are going to be spending a minute together today. Would it be possible to get the quick introduction about you?
No, with pleasure. Well, first, thank you very much for inviting me. We've had indeed very thoughtful discussions together, and not so much about me, but about what we learn with the entrepreneur we back and within the Cathay platform. So I'm glad to be here. Well, just pretty a few words about Cathay first. I think it's more interesting. Cathay is a global investment platform that you should essentially see as an ecosystem. I mean, our business is to raise funds, to invest. That's our business model. But the way we see our mission is really to be a useful investor. And how do we become a useful investor is to develop an ecosystem that ranges from VC funds investing in AI all across the world to private equity, growth equity, buyout, and being also very close and having most of the large corporates being invested in our funds. And that being true across not only, I would say, from VC to PE to large corporates, but being true all across the world as we invest in North America, Europe, and US. And that's where the ecosystem comes. I mean, we really try to make sure that we do take the most of the intelligence, connections, opportunities we can bring to whoever is part of this ecosystem, and that's what we're offering to our LPs, to our entrepreneurs, and to the team all around the Cathay platform. And I think that's an introduction of who I am, and that's why I joined Cathay 4 years ago, coming from a different background, because I was really impressed by this DNA, which I thought was very useful as an investor and quite interesting. And myself, I've had two kind of lives. I was an investment banker, then a private equity until 2009. Then I became an entrepreneur with a consumer tech in the smart home space company that I developed for a few years, sold to a large corporate. And after 14 years being an entrepreneur and executive in tech, not software per se, but in smart home, 70% of the value is software, so a bit of software. I joined Cathay as a partner and now heading the investment strategy in software, because the last thing I didn't say about Cathay is we have verticalized ecosystems. So we invest in consumer, we invest in consumer companies, and we are very close to most of the large consumer corporations in France and in the world, also in China. We invest in software and we invest in healthcare, and that's where we develop those ecosystems.
Great, thank you so much, Jean-Marc. And for you specifically, you sit on like which maturity stage of investing as well? Interesting to know where you sit.
No, that's a very good question, because I think, as I said, we're a platform, and I mean, most of the investment platforms, I mean, they're funds with teams that do share a brand. This is very different Cathay, and we have a close proximity. I'm working daily with the guys who are the partners in the VC funds, in the vertical funds in Asia, and in all offices. But myself, with our team, we're investing in growth equity to growth buyout, meaning we deploy equity checks anywhere in between, let's say, 10 million to 70 million with our own funds, and we can syndicate and so on. And so it's really in software, which is our core focus, companies in between 10 to 50 million revenues that are going to support.
Super interesting. And I know you don't like to speak about yourself because you're a humble, super smart guy, but you have these different facets in yourself, having been indeed on the M&A side, on the investment side, but also as an entrepreneur. What does it bring you before we go into the big topic of today? Because I think your viewpoint, your mindset brings differentiation to the way you work day to day.
Yeah, well, you know, I think that ideas and strategy is the most easy thing to do. And then what is very difficult is execution, right? So what it means that if you want to be a useful investor, if you want to take the most of the value that the relationship in between investors and entrepreneurs can create, you need to have this proximity on what execution means. And execution is not, doesn't fit within an Excel file, doesn't fit within a PowerPoint file. It lays through within very, very concrete and human things, and mostly humans, organizations, people, right? And so I think what helps when you've spent 15 years, I mean, I started my career as an entrepreneur with a 20 company that was failing. So I had to restructure it. We were 5 after 3 months. And when I left my operational responsibilities, we were 700 people within my scope. So I've seen many stages, well, both some were organically, some were by combining some scopes. But I've seen many stages of companies, I would say, reaching thresholds. Sometimes we could anticipate, sometimes we didn't. And then you have to deal with that. And that talks about people much more than strategy. And I think that's where it helps creating the right level of trust, having entrepreneurs understanding that, well, you can have this type of discussion without being judged. Although the more you create intimacy, trust, and symmetry of understanding of what is at stake, each of us in our role, well, probably the more efficient will be the partnership. That's what I'm trying to do.
Super interesting. Thanks a lot for that, and can feel that experience in you today and
I love
in all the things we do together as well. Thanks a lot for that, Jean-Marc. So the big topic of today, and it's not a rocket science one, considering the world we're in right now, is going to be a little bit about AI, but trying to intellectualize the topic a little bit to go a bit below the surface of like what we feel is right now. Just before we go into the topic, I wanted to put the timestamp on where we're at today. We are, as Dedale, tracking what is happening in the public markets, in the private markets as well, and looking at things from above, from the sides, and going deep into specific topics as well, just to reset the seat for everyone. Being in the end of March 2026 now, it's been a very rocky start of the year. Overall, for the beautiful ecosystem of B2B software and technology, that some people describe it as SaaS apocalypse. It is reflected in the public markets, so we keep a track of this. Since the start of the year now, across the board, B2B software, which is a universe we keep a track of continuously, is down over 20%. So this is very, very large correction territory, when the rest of the market is kind of stable. So it's really a relative strong decline. The second aspect is we keep a track of multiples. So this is how companies are valued, considering their level of revenue or EBITDA. And looking at this from a long-term perspective, now we are actually in territory that we have not seen for the last 10 years. And just a piece of context I want to bring back, because it all feels like terror is happening in the B2B software world, and we'll maybe talk a bit about this today, but just to also put things in perspective, now the valuation of technology companies is a lot lower. It's not just the same level, it's a lot lower than the absolute low that we saw in March 2020. Let's all remember the world, what it was in March 2020. We were thinking this was the end.
I know.
Things were coming to a stop.
I was having factories, R&D teams, sales guys all over the world that were asking themselves, what are we going to do?
Yeah.
Remember very well.
The market tanked across the board. It went down, but the situation we're in now is way lower than this. On average, we track a basket of over 255 B2B software and technology companies listed in Europe and North America. On average now, they're worth just above 4 times their revenue. This is extremely low. So setting the scene for what we're in right now, but I guess a bit of a theme for the discussion today will be to try to dissect a bit then what might be causing this, but also aiming to understand why in some way it's true. It deserves that challenge to this ecosystem, but at the same time, trying to sort out what is possible tangible risk and what is also maybe overreaction and also maybe a world of opportunities. If okay with you, that's a bit of a topic for today. And it's a topic where I know you, Jean-Marc, have done quite a lot of work, because yourself and at Cathay, and that's something that I can say, sitting in the middle of the ecosystem, working now with many, many parties, I think you and you guys really belong to the teams that are super thoughtful about this, refuse to stand back and wait and see, or just feel scared and wait it out. I can see you guys challenging yourselves to think it through, go level deeper, build conviction internally to be on the attack and to stay active. And deep respect for this, because as investors, the easiest option is just to sit back and wait it out. And you guys are absolutely not doing it. But to be able to take that active role, you need to have a backbone that is solid. And I can see you and the team having worked hard on this. Can you elaborate on what this has been like for you? If you have any comments on the state of how you see things, and then maybe going into what has been that train of thought investigation into this topic for you and Cathay.
Yeah, no, indeed, when we all discovered OpenAI for the very first time, I was like, wow, what's that? And I mean, the entrepreneur in my soul was like, oh, that's going to change the world potentially. So I was really intrigued and amazed by all the possibilities that it was opening. And so from the very beginning, I've been spending a lot of time trying to understand, okay, what is this really? What is the distinction in between the very, I would say, common marketing and announcement and great marketing, even using dystopy to catch the attention of the world, and having free marketing that the Silicon Valley, where I've been working a bit in the past, so I know how they work, is using, to what's going to produce. And as always, Silicon Valley is going to be wrong on the timing, but mostly right on the direction, right? So I think what is happening now is a revolution that is similar to the Industrial Revolution, but for the service industry and for the knowledge workers, that's for sure. And of course, software is coming as one of the very first impacted industry. And so I think the overall world is shifting from kind of a beta play, where you have things that were, I would say, developing in a kind of linear way, to a situation where you have to think micro and be looking for who is going to, on a micro approach, going to find its way, right? And so what we've been doing at Cathay and with my team has been, well, let's meet as many people as we can from all over the world, from all over the maturity of companies, and try to understand how they see things, what they're actually doing, not what they talk or what they explain. And let's try to figure out what does it mean for the ecosystem, very specific micro approach that we need to develop for the companies we're there to back. And that's what we've been doing. And that's where the Cathay platform is fantastic, because I just need to take my phone or my email and talk to the people who are now co-lead investor in MEI, the Jan LeCun startup that just was funded, to talk to great people who are investing in AI in Silicon Valley, to take people who are backing the most, I would say, impressive companies in AI and robotics in China, to talk to corporates, to talk to our portfolio companies all over the world. So that's a kind of access to intelligence, to knowledge, which is just unique. And we've been doing that for, 18 months, well, more or less since OpenAI came. That ended up in the beginning of January, inviting our CEOs and executive teams of our portfolio SaaS companies into a week in the Silicon Valley that was really amazing in terms of, I would say, knowledge and understanding more how to transform. Because to me, the success for any company is going to be, okay, I need to do two things. One is I know, which should be the case, very well my business. And very well by business means very well the needs of my customers. And I know my business model, obviously, how it works, and so on and so forth, right? And then I need to understand with this tech that is coming, what is going to change for my customers. I mean, how my customers' needs are going to change. How can I answer those needs in a better way with AI, whether because I improve my service or my product, the way I deliver it, the customer experience, or whether I improve the way I deliver this service, hence the unit economics and my business model. And then all the question becomes, how can I move faster than my ecosystem so I become more relevant and I have a compounding effect? And I do believe that with AI there is an amazing compounding effect. So anyone would step back and think, okay, every morning I'm waking up and Anthropic has made a new announcement that nobody had time to swallow. So this is going too fast. This is too blurry. Let's step back. Let's not panic. Let's wait and see. Let's learn from others and then apply the right recipe. I think this is going to be very wrong in most industry. Of course, if you're doing like, steel transformation is going to be less wrong than it's doing software, but it's going to be very wrong because the learning curve, I do believe, has a cost, but it's an investment, and if you don't take it on your own, I think it's very dangerous to think you're going to benefit from others' investment, right? And therefore, what we do is just like, can we support our entrepreneurs and help them adopt the lenses of the other people of the platforms, where the guys who want to disrupt the world in the Silicon Valley, where the corporates that are the customers of our entrepreneurs, and can we bring these to our entrepreneurs and help them find their way? And that's how we came to this idea that not only SaaS is not dead, but, well, not all SaaS are equal, but SaaS who have the right moat, who have the data, the context, all the layer on which AI needs to build, are guys who are not only not going to die, but if they do well, if they transform well, they have tremendous opportunity to catch a part of the tremendous growth of the software market that is going to grow because companies are going to use AI more and because it's going to eat a part of, I would say, what is happening in the service industry. So that's a great opportunity, but it's not granted that you're going to benefit from it.
Thanks a lot for this, Jean-Marc. So many topics I want to unpack in what you just said. Maybe go through a few one by one. First, starting with indeed, is SaaS dead or not dead? Your conclusion is rather sharp and clear, and we tend to agree. How do you see that statement being true or false?
Well, then I would reformulate, because I do think that in this context, the last thing to do is to have very definite and absolute answers to any question. And the only way to find your way is to try to be nuanced, to go into the detail, to try to understand in the very small ecosystem in which you operate, what should be done, right? So SaaS is not dead means not all SaaS are dead. But some SaaS are going to die. Some SaaS are going to be commoditized and will, I would say, not keep their value. And some SaaS can be one of the winners that are going to catch this opportunity. That's what I believe. And the main reason is, as probably all people listening to us know, an AI agent needs data, needs context. Otherwise, what is an AI agent with LLM? Then we will see with world model. But currently, what is AI agent? It's LLM. LLM is using all the text and textual information that it has found to try to determine in a probabilistic way what is the right answer, right? So you understand very well that when you're asking as a personal and a human, an individual, ChatGPT, what should be done for my health? If I ask ChatGPT to do this, not prompting that he's a doctor, he's going to use all the text he knows. If you prompt it as a doctor, then he will use a narrower context and will be more relevant. That's no different in a company. So if you want an agent to build value in a company that is much more complex than just your personal context, it needs to have a very constrained context that it's going to use. And where is this context? Within the systems of records that since 20 years have digitalized data, workflows, processes within the companies. So, well, of course, some agents may create their own data moat very fast because they're going to learn things that are not digitalized yet, like your personal behavior, for instance, if you take, for instance, a coach. But for others, well, like a legal agent, well, if you build a legal agent on top of an ERP for the legal function like in DD Trust, one of our portfolio company, well, it means that this legal agent is going to have the whole history of your legal entities, the whole history of your matters, the whole history of your governance, the whole history or the whole context of who's doing what in the organization is allowed to access to what information. And this agent is going to be much more relevant and therefore useful and has a real right to win, to sell and to upsell. And maybe we'll talk about seat-based pricing, which is one of the key topic, but is the right to win to even bring more value and sell more to its existing customers. And that's the way we see it.
Super interesting. So first, two key principles that come out of this deep investigation you've done. System of records are an infinite, already pre-existing layer that is not going anywhere, and that is in the support of the incumbent that has already built it, hopefully. And then you add the context layer, which is that narrowing capacity to give then the agent the right length and access, records, rights, governance to be able to do its job in the best possible way.
Exactly.
Super interesting. And you mentioned Dedale Trust as a company. In the context layer, you have another portfolio company that is super cool called Powell as well. What do these guys do, and why does it take part in this in an active, positive way?
That's a very interesting case. Powell is a digital workplace. We used to be called an intranet. So intranet was a kind of static page for internal communication, not very sexy, not very useful. Well, all things changed with COVID because suddenly you had to organize hybrid working. And so a digital workplace allowing to curate the information you have access to centralize which are your digital tools you're going to use, to help collaborative working became quite critical, right? And that was a takeoff or an acceleration of this market. And then comes the AI. And with the AI coming comes the question, well, do we still need an intranet? That was a key question, right? We think, yes, we need an intranet. Why that? Because, I mean, if we look forward, what's going to be our life in a few years from now? We're going to be essentially people who are going to manage still, I mean, each of us, the one who are already managers are going to still manage people, right? But any one of us, individual contributors, are going to manage agents. And you're going to supervise, orchestrate agents. And if you want your agent to be relevant, again, it will need to have the right context. So the right context means you need to prompt it. You need to give it the right information, documents, data that is relevant for whatever is the mission of this agent. But of course, within your digital workplace, who knows who you are, in which team, to which project, what information you're allowed to access or not, right? Those are very interesting information for an agent. And so the digital workplace suddenly becomes a tool to govern part of the context that will be used and leveraged by agents. And the good news is one of the reasons why Powell was successful was because they had developed all modules to govern, I would say, customization of digital workplace at scale in a very fast way. So they are, and they will become, that's our conviction, and that's working hard with that, with the team, the essential enabler, or one essential enabler to the AI transformation of companies. That's an example of how the system of records can catch part of the value that's going to be created by AI.
Very interesting. We'll go a bit into, probably a bit after, how do you go about researching this and developing that conviction that it's part of the answer to what the world is going to become like tomorrow. But just before we go into the process of getting there, other key principles that you've seen, you mentioned indeed the business model. SaaS is not an object, it's a way of doing something. How is it today and how do you see that changing tomorrow? This also you intellectualized how you see some of the changes or necessary changes that are likely to happen for existing companies.
Yeah, well, I mean, SaaS is a business model, right? So it's what? It's consuming software in the cloud within a subscription that is being delivered to you over your front pages, right? Front applications. The business model itself is not going to change. Then a certain number of things are going to change, probably dramatically. First, the UI. We're very used to these static pages with buttons that have digitalized static workflows and replicable workflows. That's going to completely change with many implications. One thing which is going to change is that, probably you won't have anymore your static UI as being the only UI and interface to your customers. They're going to use agents, and they're going to use maybe your agents, but they're going to use also third-party agents. I mean, you're going to find your SaaS within Word, PowerPoint, Claude, Slack, Microsoft Copilot, and so on and so forth. So you really need to think, how am I going to be embedded within the key interface that my customers are going to use tomorrow? That's one. Two, you probably need to think that your customers are no more only humans, but also agents. So you're going to think your product so that it talks, interacts, is connected to the agents of your customers. That's another shift, right? So that's for, I would say, the interface and interaction part, and probably even your UI, because I do believe that you will still have some pages, UI, because not everything will be done through a chat interface, is going to be much more responsive and adapting to your personal context. All is about personalization, right? So that's one. Two, I think it's about the pricing, of course. So we can read everywhere, well, SaaS is dead because seat-based pricing is dead. And because even if it's not dead, because you provide productivity to your customers, they're going to destroy employments, so you're going to destroy seats, so you're just self-destroying yourself. Well, again, this is, I think, kind of oversimplistic, and you need to look at it in a much more nuanced way, and there is a downside, which is what I just described, will happen in certain cases, but there is the upside. And why there is the upside? For several reasons. One, when you talk to buyers within large corporates, you know what? They want budget. So pure out-based, usage-based tarification is something which is not necessarily very easy to implement. So
procurement hate that.
Exactly. So then first, you're probably going to go for a hybrid thing, right? That's one. Two is, well, if you stop selling on a seat-based approach, but on an output-based, then the question is, what is the output? And if you think that your service is going to provide more productivity to your customers, why don't you think that the output-based is going to capture part of this value? And it's a very kind of renouncement to think that you're going to be obliged to lower your prices. I think it's the contrary. If your service has a value to your customers, which is the basis of any, I would say, business process, well, then you should have the ability to price it in a proper way, which is not going to make your TAM narrower, but could grow the TAM, right? And the last thing is, I see also an opportunity to be kind of more disciplined in the way you drive your business. Let me explain myself. One of the things that happened and that the customer hate is that I'm buying seats. I'm not sure they're all being used. And so sometimes I'm paying for nothing, right? And so your kind of revenue curve looks like this. I have revenues with my seats, then my customer realizes is not using all those seats, so either downsell or even churn, right? That's why you have customer success, who's going to monitor the usage of the seats to try to prevent that, right? But the reality is, it's easy not to look the reality brutally because of this model, right? The day your revenue is more indexed to the usage, it means that you're going to know much faster and much more accurate way, is your service valuable to your customers? Okay, that's a risk, but that's also an opportunity because it means that you have much more ability to understand how you can make your service better, how you can bring more value to your customers, so how you can grow your revenues. So it's less comfortable, but it's also opportunity, not only a risk. And that's why I'm not pessimistic at all if you have a good solution.
Super interesting.
And a good management and team who is looking at that in the right way.
Indeed, and we'll probably go into the organizational capability layer, which is more important than ever these days. I was thinking of the business model and the pricing. Just wanted to add an anecdote. We've been working for probably the past 2-3 years now, I would say almost continuously on the legal tech topic. And we actually did a survey with lawyers in law firms to ask them how much they were spending on AI and what was the perceived expectation in terms of productivity gains and what would they do with it. And to try to understand, is that thesis of they're just going to cut people to save, is that something that the customers see or not? The answer that we received by far was, yes, they do see a lot of productivity gains, but it's very different according to the function you're in. And so some functions which are very linked to paralegal, workflow, more administrative tasks, for sure, there's going to be massive productivity gains. But at the same time, and it came like strikingly, and maybe this is something we need to track over time, but most of the answer was, this is not for us to cut, it's for us to actually want to do more. Because today, we are just constrained in delivering because, well, it's actually hard to find good people. And if we have ways to make our existing people more productive, more valuable to their own customers, leveraging AI, it's a net win positive story. And we'll see how that evolves over time, and we cannot bring definite answer, but indeed, the simple answer of everybody's out of a job tomorrow is probably a little bit far-fetched, even though, as you said, there is a direction and we need to be aware. Also want to point out what you said, which is so relevant and important, is indeed the subscription model is incredibly attractive also for investors because it gives you predictability on revenue. But you're totally right. If you don't set eyes on the value provided to customers, it doesn't last as well. And so indeed, maybe this shift is going to bring a little bit more visibility into that, a little bit more focus into that, which may lead to a bit less predictability of revenues, even though, as you said, no customer wants to be taken as a hostage of what might be the bill at the end of the year. Nobody wants that. And so you will always
and
have
if your service is valuable, nobody wants to just shut down the service the 30th of June because the budget is gone, right?
Exactly. And to be honest, because we see that happening as well, including with ourselves, it's also an issue that we see day to day with existing LLMs because you get out of credits very fast, right? But then I think many companies are seeing that already today. You don't know what that bill is actually becoming like. Your entire tech stack cannot function like this. This is not possible in the business world. So things will have to probably go indeed through some form of like hybrid type models to the right level. And we've seen, thinking of the past 10 years, amazing publicly listed, super fast growing companies like Snowflake, which from the start have had this approach of kind of volume-based pricing with some floors to give you predictability, but at the end you're paid on what you use. And this is probably a bit of a direction for where the industry may try to go towards. You mentioned that a few times, and it feels important, so let's go into it. We cannot look at this in too big of a wide lens, because then you end up with like oversimplistic statements. It doesn't make any sense. It needs to be done at the micro level. Could not agree more with that. What does it mean? How do you look at this at micro level as an investor, and how micro does it get? Because, and this we've had discussions on this in the past, it goes down to the individual as well. Can we go a bit into this topic?
Yeah, I think it's a kind of entonnoir. Well, so we start with some macro assumptions, right? So what we invest in at Cathay is enterprise software, at least B2B software, that's where we can find resilience. So of course, we focus on enterprise software because we believe it's easier and less volatile than consumer software. I think that's obvious, but some may have a different opinion, but that's where we try to focus, not only because we think it's more defensible, but because if you want to be relevant and able to go from macro to micro, well, you need to be focused. Otherwise, the learning curve when you look at the new opportunity is too long, right? So that's one, enterprise software. Then we really do it with two lenses. One is, how can we prove to ourselves that there is the resilience against AI? AI is not going to substitute the core value of the service. And this is true for software, but any other type of business, we'll come to it later, right? Mm-hmm. And there, it's essentially about some moats that are hard to replicate for AI. That's proprietary data, that's deep domain expertise, it is deep context mastering, whether being embedded into other IT stacks and workflows, for instance. This is about trust, being the relevant, I would say, responsibility for compliance or regulation compliance is something that no company wants to take internally and will still want. One of the things we haven't discussed is, okay, companies are going to do DIY. They're going to develop their own software stack. It's the return of the CIOs doing the job instead of their vendors that have been taking too much money away from the table in the past. It's not untrue. It's going to happen, but just to a certain extent. So that's all we're trying to understand. How critical is this and how sticky is this, right? But that is not enough. Then there is the second part, which is, can we have this company be a relevant provider of additional value through the agentic layer? And then on that, we've developed a view on what type of agent can be developed, try to understand this. And that then it becomes really people and organization part. Because, one of the things AI is doing is it's reducing dramatically the cost of the code base, right, of developing software. And so it's very interesting because in the past we had one product owner for 7 software developers, standard team, right? We're going to probably go into one product developer for maybe one software developer, or even a blurry lane in between product managers and software developers. So product management, product strategy, which is not like feature prioritization, right? It's customer need understanding being transformed into value can be brought to them, being transformed into revenues that I think being transformed into P&L. That is product management, as US people are sometimes good at doing, right? Is going to be the critical key for success. And so you really need to understand how good is the management and the team into product strategy, product management, how fast they can implement it and get velocity. And that comes to people, skills, organization, culture. And because culture is not something is decreed, but culture comes from practices, then it comes to is the top leadership and the CEO, the chief transformation and AI officer of his company, right? And can we help them and support them in this? And so that means that in our due diligence, it changes a bit the scope, where we need to come with a much more entrepreneurial and operational lens and go into deep discussion, understanding with the management to understand really, I mean, what's the potential, where maybe we can help, if we can, being humble and understanding that, I mean, we're not doers, right? We're just investors. But that's the second point which changes. And the third one, I think, which is changing as well, is valuation discipline. And I mean, what the market is saying is essentially three things. One, the market is not going to grow as much as it was growing before, which is already true, not because of AI, but because of the macroeconomics and things that are totally apart from AI. Two, there is an AI risk premium. And three is that then you're moving into a much more cash flow oriented business, right? And so we do believe that you should invest with a view on what will be the valuation based on a cash EBITDA multiple at the exit. And this is a bit more difficult than predicting your revenues, right? So that also means you need to go into a deeper understanding and view and assumptions, with all risk to be wrong, of course, but how you build your investment case. And that is one more element that is driving this, I would say, software investment as very interesting, very attractive, but much more now an alpha play than a beta play than it used to be.
Super interesting. And many things to investigate. Fortunately, all of the points you mentioned, with work, it's possible to get some of the answers. There are still question marks here and there because we don't know to a full extent where the world is going. Plus, you say not everything is in control with macro and so on. But still, all the points you mentioned can be indeed investigated, diligenced, researched to try to form a level of conviction along the way. One thing you said in the past in our previous discussions that I could not agree more is what has changed or what is changing, however, is it as an investor, you cannot just back a good market with a solid product today that is somewhat differentiated enough from competition to feel good about the sustainability of this differentiation, and then to back a bit of a reliable trajectory that you can sort of foresee because of the historical path. This was probably last 10 years type of investing, which worked really well in the SaaS world, where you can look at level of adoption of software in a certain end market and try to understand with competitive dynamics, like how much of a share of that you're likely to take. So it still requires work, but intellectually it was sort of a finite scope to go into. As you said now, you need to do that, plus not knowing exactly what is likely to happen because the parts are moving faster than ever. The view at the really core in terms of do you see signals of capabilities, DNA culture, change management capabilities, velocity, looking for those signals at super micro level to try to understand, am I backing a team that is likely to sail the right way in those high seas that we are in? It comes on top of everything. And as you rightly said, it's added risk for investor. And this is something that we also see across the board is also driving to some extent valuations that are changing. If we take a bit of a step back as well, B2B SaaS in a way was seen as not risk-free asset, but I remember some investors saying, this is like investing in infrastructure. It's like buying a a bridge or a toll road because it's the infrastructure of business. It is predictable. You can look at the market, you can look at flows, and you can price that. And because it was seen as relatively risk-free, it was worth that mega premium that was there, even with some asset classes that we are looking at things just in a multiple of revenue perspective because it kind of compounds forever that way. What you're bringing, which is probably important, and also thinking of the entrepreneurs on the other side out there, is demonstrating that operational entrepreneurial velocity is now a critical must-have. And thinking about the end game in terms of a business is there to make profit, grow, because growth is super important, but at the end it needs to make sense from a business model perspective. And this is how, even for growth buyout investors that you will still think about it this way when you think about does it make sense or not. And probably those two layers are a little bit different, or maybe they came from more of a distant past that maybe the past 10, 15 years sort of put aside because of that risk-free factor. Now it's back in because the AI risk is there. So those things come into play again. And I wonder how this impacts your kind of investment committee type discussions or the decisions you make, the psychology of investing as well. Have you seen yourselves change and adapt from this perspective?
Well, we're trying. It's not easy, but just to come back on what you said and try to answer your question. What I liked when I discovered software a few years ago is that it's a factory, right? A factory where, and I have been doing connected objects, which are notably industrial product that you need to industrialize. And so it's not an AI risk that we have today within this factory. It's a customer risk. I mean, driven by AI. I mean, it is, will my customer spend the money into more SaaS or into new AI commerce? Will my customer want to rationalize their tech stack because they're having new layers, whether DIY, I mean, they develop themselves with AI or with vibe coding or with agentic platforms or new AI native vendors, but then they're going to reduce the number of vendors. So your revenue is at risk, right? And so you're kind of coming back to the pioneering time of the SaaS. And so what do you need to do as an investor is still analyze in depth, of course, the metrics of this SaaS factory, from lead generation to client retention and upsell, for sure. But you need to understand deeply, I mean, does the team is able to have the right connection with the customers, tell them the right storytelling. I mean, sometimes you have a great product, a great team, a great solution, but if you don't let people know, and sometimes engineers being trained in the Descartes country may feel that the product should be good itself to be self-recognized. Well, it's not, maybe not enough. So you really need to come back to some skill that you may have when you're founding a company, right? And so what we're currently really changing is we need to find people, and this is not we as investors, even myself having been an entrepreneur, that are going to help us create this connection with management to, well, assess whether we feel comfortable, but even more than assess, again, it's creating the right dialogue. It's not a question of judgment. I mean, nobody is smart enough to be working, I would say, its own silo, and you're improving if you share with people. I mean, why did we have together 5 discussions, I think, on this topic along the last month is because I was very eager to discuss because thinking alone was not right enough, right? So what we try to do is during the due diligence phase, and then, of course, being continued as an entrepreneur, try to be supported by former entrepreneurs, especially people with product skills and engineering skills, so that we can create this right connection with the entrepreneurs and we can become a more useful investor in helping them navigate this way where they're going to be forced to catch attention of their customers, come with the right solution. And you know what's happening at the moment is, again, the vision is easy. The difficulty is how to manage the gap in between the vision and the reality. And this is on all dimensions. I mean, I think every day I'm like having kind of my head bumping because part of the day I'm looking at what I can do with Claude on my individual experiences, announcements that you think that the world is going to change overnight, and then you look at reality and you know it's not true, right? But as a leader, whether an investor or more as a CEO or executive team, your role is to be forward-looking and to bring your whole ecosystem behind you. Your teams, your partners, your investors, your customers. And to manage this kind of gap that for one of the greatest person who knew how to do that was Steve Jobs with his distortion reality capacity. I mean, just help people project themselves in something that is much different from what they believe was doable, but not lose them. Otherwise, they just will refuse this, and you're going to be stuck in the middle. And I think that's where we try to create the right connection with entrepreneurs, and it's not easy, honestly.
I'm sure, and also I can feel and see what you say in saying the goal as an investor is not just to bring in capital, because to some extent there is more capital than ever. It's wanting to help out, and I can see it's very deep in the DNA of Cathay and yourself. And the way to help then is a little bit different as well, has to evolve. And it's probably with this perspective that you bring that entrepreneurs feel like, yeah, with Cathay I'm more likely maybe to sail in the sea, not feeling too alone or having this thought partner and helper to do it with and connect to the right ecosystem.
I'm trying to talk with the entrepreneurs we back more about product and customers than about finance and KPIs. Yeah. Although we have, of course, very detailed KPIs, but I mean, they're not interesting. They're just the output of how good is your factory. But this is a very delayed indicator. And so if you could focus on the indicator, you're not focusing on the root cause, right? While the root cause is important, so it's product and customers, or customers and product.
You mentioned it a couple times. It's important to go deep into this, Jean-Marc. You mentioned the DIY aspect, which is indeed a super interesting trait that we can maybe unpack just for a few minutes. Always a pendulum in the world of business and technology where something new comes up, you want to do it all by yourself, but then you realize that things that have been done are maybe not done at the level of professionalism that they should be, or that once you've done something, it's great, it works, but things break, things need to be maintained, or things are not compliant. And this has led to that beautiful trend of third-partization of technology where, for example, if we go back in the 60s, 70s, 80s, banks, which are the biggest technology companies on the planet still today, to be honest. There are more developers at JP Morgan and the big ones that in most of the big software companies, just because naturally they've been built on those homegrown DIY systems that are now taking thousands and thousands of people to maintain. In the 80s, 90s, 2000s, and now in the past decade more than ever, we've seen that arrival of third-party technology companies, first developing for others as development houses, and then providing SaaS, so software applications that serve an ecosystem in the best possible way. Indeed, as you said, with AI and with beautiful capabilities of Anthropic and the others coming up, vibe coding is a sub-trend within this as well. The capacity to DIY has been reopened immensely, and it's exhilarating, right? When you're doing something by yourself, and it works, and it delivers result. But as you said as well, the same curse that happened in the past decades about DIY still exists today. How do you see that happening?
Well, first, I would reiterate what I said before, which is you need to look micro, and not macro, right? And so I have no macro view. I have no personal opinion on how much will the development of software that's going to happen and accelerate now is going to be taken by DIY versus vendors, and in vendors being agentic platforms versus software providers that do provide already custom agents and software. I don't know, right? What I know is if you think that because vibe coding because it's something which is underway, right? But if you think that vibe coding is changing dramatically the game, I think it's a misunderstanding of what software development is. Vibe coding is helping you to produce more code in a faster way, right? Vibe coding is also able to I mean, what vibe coding is doing essentially is pulling up the level of abstraction. So it's funny because when developing in C came, people who were doing assembler were thinking that you couldn't code in C without being knowledgeable about assembler. Well, nowadays nobody knows about assembler, right? So I think we're going through the same path somehow. But in the end, what makes the system valuable and sustainable for enterprise customer is the overall architecture, is everything you mentioned, which is very much a part, I mean, which makes the system certain to stick or to feed your needs and to provide the right level of guarantee, whether cybersecurity, whether compliance, and so on and so forth. And this is not being eaten or not so much eaten by AI. And so this is not going to change. So what you should do as a SaaS is make sure that you have the right dialogue with your customers, which is just a very basic business principle. And so it's not like we're not talking about that because we think we have a kind of divergence and conflict of interest. We have. But the interest of working together to understand what makes more sense, given the immense value that AI can create, provide much more upside than not talking to your customers about, okay, there are things you want to do, let me know what you want to do. Let me see if I can help you. That's, I think, is the right approach, and looking at that, and that's what we're trying to do because we have connection with corporates, we are supporting SaaS players, we have our VC funds supporting agentic platforms, and we're trying at the moment, right now, to create dialogues in between those various parties to better understand what's the point of view of the others, what value can be created, who's more legitimate, and more than who's going to eat the cake. It's how can we share in the most valuable way the cake, which is growing so fast that the problem is not to share the cake, the problem is to have it grow very fast. And that's more where I think we need to focus as an entrepreneur and as an investor backing the entrepreneur.
Super interesting. And indeed, in remembering from our previous discussions and some of what you put on paper as well, it's difficult to put numbers on it and it's maybe more trends, but indeed we're probably not in a world where software is going to go down, being completely eaten by AI. Probably there is still some growth in what we call traditional B2B SaaS somewhere, because there's still plenty of industries that are still on their way to digitization. We can think about sectors we know very well, like the construction sector, even in healthcare IT, for example, where you're still in that long-term adoption curve of technology. But then, as you said, there's more growth, there's more spend coming with AI capabilities. Part of it probably being taken by new forms of technology, agentic, totally new gen vendors that are coming up, but as well, capacity for incumbents, if they play it well, to capture and monetize some of this as well. Does that reflect a bit how you see the world?
Yes, I was thinking about that yesterday. I think when we look at the world and we see some emerging players, fantastic emerging players having like a stellar trajectory, we may think, and even in some new players that are VCs, hybrid VCP plays within services or traditional businesses, we may see the thing as, okay, the world is going to be fully disrupted. But this is, I think, very wrong, because this is neglecting the fact that the world is made of very heterogeneous ecosystems. And so it's not going to spread that fast, right? So there is space for some emerging players that have a fantastic trajectory, and some will have that, some will die. That's a type of investment, VC. This is not mine, but this is what we do at Cathay as well. Okay. And there are also a part of the world which is going to change more slowly for whatever reasons. And within those spaces or ecosystems, the players that are the incumbents that are going to change faster than their peers are going to be the winners. And I think that's where only micro is the right approach.
Super interesting. Thank you, Jean-Marc. So we went micro, but to de-zoom even more, we spoke a lot today about B2B software. But indeed, what is happening in the world is bigger than just looking at SaaS. As you mentioned, this is impacting everything. And closest to SaaS is actually services, because SaaS is only an enabler, or B2B SaaS is only an enabler of a business service that can be done better, faster, stronger, quicker, leveraging technology. AI is going to impact and transform software, but is going to impact and transform the services themselves. This is also an area that you are starting to look at as well, right?
Yeah, it's probably the biggest opportunity that investors and entrepreneurs face at the moment. I remember, when I sold my business, which was a digital native to a large corporate, I was very excited about digitalization in a large corporate. That was a more slow path than I would have expected, because with software before AI, you had a very limited ability to customize the software to the need in a very fast and efficient way, right? So that was limiting what you could digitalize. What AI agents are doing is that you're going to be able to tackle use cases that are very ambiguous, very specific, very tailored to the context, and have still a software system analyzing, taking actions at the beginning with a human in the loop, then gradually with less human in the loop, and with the human going up and up into the abstraction and in the orchestration of those agents. Yeah. So this is what are going to happen into the service industry, and that's going to be a fantastic opportunity. And then you may look at it in two ways. One is that's an opportunity for software vendors, but I think in a certain number of cases, the mastery of the model itself was combined with the ability to customize software through agentic platforms or even internal development within companies is somewhere where it's opening a new way of looking at digitalization that was not open in the past. And therefore the TAM market that we discussed about is it's like 15 times the TAM of the software. Doesn't mean that all that TAM is accessible to this revolution, and it will take a lot of time, but I think it's very interesting. And therefore, what we're looking at is you have several models depending on the margin of the service business you're looking at, depending on the fragmentation of the service you're looking at, depending on the fact that your customers are having only one provider or several, depending on how much the service is critical. You may want to tackle it in different ways, whether you want to build businesses from scratch, but AI natives, but service businesses from scratch, but AI natives sometimes. Maybe you want to buy existing business and then digitalize them, and then go into the traditional buy and build play of private equity. This is all the, I would say, approach we're working on, and I think is a fantastic opportunity.
Super interesting. So as a technology investor, looking at tech-enabled service is maybe indeed increasing the TAM of what is interesting and attractive to look at. Cool. Maybe it could be topic number 2 where we could go as deep in the future.
With pleasure.
We're looking at that as well, thinking about indeed what are attributes of services that make them attractive for this type of play, or finding ways to see value that we see in software. So recurrence of revenue, regulatory driven, somewhat protected end market, or very verticalized angles, expertise, indeed proprietary data, entrenched go-to-market with customers, existing relationship, trust, and so on. All the things that make software potentially attractive or defensible exist in the world of services as well, plus all these questions about technology on top.
And if I may, for this one, what we've said several times in this conversation about, it's not so much about tech, it's about people and organization is going to be even more important because obviously a service business is even more a people business than a software business. So your ability to understand organizational sociology and having the right leadership and the ability to transform it is going to be, or to set it up if that's your approach, is going to be even more critical than in software. So that's going to be an even more interesting play.
Super interesting. Thank you so much. So people still remain very much in the middle. It can be a bit of a conclusion for today and an opening on what could be another area to go deeper into in the future. Thank you so much, Jean-Marc, for taking time with us today.
Thank you, Benjamin.
It was wonderful to get to speak to you and get your words of wisdom and your viewpoint as an investor on what is going on in the world today.
Thanks. Bye.
Bye.